Artık dijital varlıklarla şimdi yapay zekâyı birleştireceğiz. Çünkü aslında, iç içe geçmiş 2 tane, hani, varlıktan bahsediyoruz ama şimdi nerede buluşacaklar, nasıl yenilikler yaşayacağız ve bizi neler bekliyor? Bu oturumun moderatörü Outrun kurucu ortağı Elbruz Yılmaz. Alkışlarınızla sahnede öncelikle efendim. Ve kendisine Coinbase Kurumsal Satışlar Eş Başkanı James Morek ve DLT Finance Kıdemli Direktörü Kuhne eşlik edecek.
Evet, mikrofon çalışıyor sanırım. Tekrar merhaba herkese. 2 tane yabancı konumuz var bugün. Birazdan sözü onlara vereceğim ama kısaca bahsetmek gerekirse demin de konuştuğumuz üzere arada yemekte görüştük çoğunuzla. Kripto varlıklar, dijital varlıklar artık hayatımızda, iş döngümüzün bir parçası haline geldi. Bugünkü panelimizde daha çok bu konuyu derinlemesine incelemeye çalışacağız. Panelimiz İngilizce olacak. Değerli konuklarımıza ben sözü yavaşça vereyim. James, Jan, welcome to Istanbul. How did you like the city so far?
Çok güzel.
Oh, very nice. Jan, what do you think?
Harika.
Oh, very nice. So some Turkish already.
Yeah.
Very nice to see. So thanks for coming to the event. It's amazing to have you guys here. Before we begin, maybe a quick intro. What do you guys do? Obviously, we know the companies quite well, but give us a little bit of a background about what you do and the companies, please.
Sounds good, and pleasure to be here. Really, my first time actually in Istanbul, so very, very exciting. And I've had a very warm welcome from everyone. So yeah, I'm James Morek. I co-head the institutional sales team for EMEA and APAC at Coinbase. What does that mean? That means we cover anyone who's not really non-retail. So we look after banks, brokers, fintechs, asset managers, hedge funds in their crypto journey, whether that be at the start, middle, or the maturity of their crypto services. I've been with Coinbase now for 3.5 years. I was previously at BlackRock. I was there for nearly 12 years, ran an institutional sales team for the liquidity business and got involved in tokenization, which sort of led me to Coinbase. So,
thank you, James, and hopefully we'll have you back in Istanbul soon.
Hopefully,
Yeah.
hopefully.
And Jan, this is your second time, but it's been a while, I think.
It's a while, yeah. My second time, last time was 35 years ago.
Oh, wow,
And,
okay.
if I've been here back in 35 years, that would be good as well, but hopefully it will be much sooner than 35 years, yeah. Yeah, I'm with DLT Finance. We are a technology provider and an investment firm focusing solely on digital assets. So we enable our clients to scale crypto services to their clients and to have access to institutional liquidity through our connection into the market. So we have a very modular platform approach, which enables our clients really to cover the full end-to-end life cycle of digital assets and integrate that fully into their platform. To make that more tangible, for example, last year we enabled Kraken, crypto services, fully regulated in Germany and actively marketing their product under our license. We did a similar thing with eToro for them. We also integrated the retail order flow into our liquidity network, providing for the liquidity there. But we also provide liquidity to traditional banks. We act as a broker for the custody of SDX in Switzerland. So we have also sustainable business within the more TradFi institutional world as well.
Excellent.
Myself, I'm heading partnership and sales. I was in TradFi for some time, switched side 5 years ago in institutional sales for crypto. I've been at Coinbase before as well, and since last year at DLT Finance.
Amazing. Thank you for that. I think what I want to do is take a step back and look at the macro industry trends a little bit. If we were having this panel 4 years ago, we'd be talking about different things. No regulation, clarity, some bad experiences, look at FTX and other things. But now the industry has changed, it has grown up. You have much more institutional flows into it. But what do you see outside of Turkey in terms of trends and what has changed for you when you talk with your clients, banks, fintechs? What is the expectation from them? You can start, yeah.
From my perspective, I think one of the stories of the year has really been around stablecoins. Historically, probably just more of a on-off ramp to enable crypto trading, but I think it's really found its sort of utility and function, whether that be cross-border remittance, whether that be payments, whether that be collateral. It's finding some really good use cases, obviously gaining scale, and there's more adoption coming in from banks and broker-dealers, but particularly banks who are starting to launch their own stablecoins. So obviously seeing, one, the opportunity, but also the threat that stablecoins might bring to them. So I think that's definitely been the sort of, it's not as exciting as a meme coin, but it's definitely been something that's definitely been gaining scale and institutional adoption as well. I think really exciting to see some banks coming to the market who've historically been staying away for various reasons, mostly around regulation. That has sort of, they've done a full 180 now, and they're now exploring how they can enter the market or even entering the market. We've done some announcements with the likes of JP Morgan, PNC. We've had Webull as a good fintech coming in. So we're powering those entities into their sort of journey of crypto. Really exciting to see that. I think also just one bit of news that came out a couple of weeks ago was the Czech government having a Bitcoin reserve.
Yeah.
I think there's definitely a lot, they're not the only ones looking at this. Obviously, we had some smaller nations like El Salvador adopt Bitcoin as a national sort of currency. I think we've seen the US government and UK and others have some sort of crypto reserves, and that they can sort of move into a sort of a reserve currency pool that could be investment as well. But I think we'll start seeing some other countries as FOMO kicks in and people don't want to be the last entrant to the market. And then the final one for me has been digital asset treasuries. We've seen a lot of corporates come into the market specifically around having investments in specific asset classes. I think we've slightly seen the sort of the euphoria of the interest has sort of died a little bit for now as prices have dropped a little bit, but I think there'll be consolidation in the market and you'll see a few of them and they're here to stay, and they're there really for various tax reasons and for people to gain access where they can't through ETFs or direct investment.
Yeah. So nobody's talking about NFTs anymore.
Not as much. No.
Good things. Jan, your take on it?
Yeah, I mean, that's pretty much on the point, especially with regard to stablecoins. Whoever has been at Cybers 2 months ago in Frankfurt, basically Swift was kicking off the event with the announcement together with Consensus to build a layer 1 chain. And the whole conference was all about stablecoins and digital assets. And if you compare that, I was at Money 2020 2.5 years ago, and the PSP couldn't care less with regard to stablecoin and the utility it gives. So that has changed tremendously. For me, being within institutional sales, I always had this picture with regard to institutional adoption of crypto. There's 2 pictures. One of them was this Mr. Turtur, the pretending giant from Jim Button and Luke the Engine Driver, which is a very famous character in German children literature, which is really big and a giant, and when you come closer to it, it shrinks and gets smaller and smaller, and once you stand before him, it's just a little kid. And that was a lot we saw within institutional adoption, was just basically some announcement and news, and if you scratch the surface, there wasn't much behind it. On the other hand, you had this picture more of an iceberg where you only saw the 10% above the waterline and a lot of things happening within these institutions, but they didn't feel comfortable in sharing what they were doing for apparent reason, reputational risk, the scrutiny they were getting from the regulator in some part of the world at least. So they have been very shy about what they were doing. And since probably 12 months now, you see that, as you say, they done a 180. And they have built a lot, and they are coming out with that. We see that all over the place, and I think we'll see much more of this in 26 as well. For example, in Germany, Commerzbank finally announced that they will have a crypto offering to their clients out, and I know they have been working on that for 5 years, and they haven't announced anything. Now they finally did, and probably early new year, they will have an offering. The same with the saving banks in Germany as well. So finally, these things are coming coming into place and getting there where we 5 years ago hoped we could be much quicker, but better late than never. Yeah.
Obviously, crypto and stablecoins have many different use cases. So when you look at a bank or a fintech or a neobank, they can utilize that capability in many different functions. Mostly we have seen a lot of retail interest where they want to offer trading of digital assets to their users. So maybe let's talk about that a little bit, where if you are a bank CEO or a board member or a VP at a bank who's in charge of crypto initiative, what are the key functions and initiatives that you can focus on these days? Is it just retail? Is it treasury? Is it FX? Is it remittance? What are some trends there?
We're definitely, we're definitely seeing interest across the whole of the different business lines within the banks. So it's the retail certainly. I think a lot of the retail banks have seen flows come to us, and they're like, we don't want that to happen. We want to control it within their own bank, and that should enable more clients to get comfortable as well. So we're very much an advocate for that. We can help power that. But you've seen within the corporate transaction bank, as Jan mentioned, we were at Cybos. They're looking at it from a payments perspective, a settlements perspective. Can they support the corporations that have multiple entities service their intercompany cash balance reallocation? So again, that can lend itself to stables. We've seen banks now looking at deposit tokens. Can they compete with stable coins? JP Morgan launched their deposit token on Base, which is a layer 2 blockchain that Coinbase supports. That was the incoming inquiries since then is like every bank is now going, how do I do a deposit token? So I think there are other ways to look at this. We're certainly seeing investment banks looking at ways they can finance their clients. So can they take Bitcoin collateral and provide them with fiat? So I think that it's not just buy, sell, hold. That is primarily what maybe banks are starting to think about. But working with platforms like ourselves, you can then sort of touch multitude of like product solutions that your clients need.
And different business functions.
Yeah.
Jan, from your point, DLT obviously provides an infrastructure layer that enables many different things for a bank. But what are some interesting trends there with your clients?
Yeah, what we see is that offering a crypto on-ramp has been in the past a lead magnet to get clients in. I think it's probably not that much more, but it's more coming a hygiene factor. You just need that. You need to enable clients to at least buy Bitcoin and ETH and hold it, not to lose clients to the neobanks going out there. What we see is that we see a lot of movement from the neobanks and neobrokers to go into more classical investments through the tokenization. So they add tokenized stocks into the portfolio. They add yield-bearing products into the portfolio to tokenize money market funds. And I think it will be important for banks to integrate that into their offering as well, to basically stay ahead of the race and not lose out to these entities. But beyond that, it's much broader than just the brokerage things, the payment use cases you mentioned. We see that corporate treasury is becoming more and more interested into that, and the whole infrastructure is evolving around of the benefits it brings to corporate treasury, and that's not only payment and cross-border payment, it's also treasury management, cash management, and in a much more effective way. And I think banks are understanding that it's not about the next crypto bull run and chasing prices here. It's really about the financial infrastructure layer, which is built on digital assets, which is more sufficient than the banking infrastructure, which has been built probably 30 years ago when I was in Istanbul my last time.
Yeah, true. Yeah, and I think just to add to that, tokenization is obviously a big theme and has been for a while, but we're now actually seeing that deployed in a more meaningful way, where it's not a proof of concept, it's actually issuance backed, where there's a token against a CP or non-public equity, and where that can now be distributed and have a sort of proper secondary market. Those things I think are definitely going to be big trends for 2026. The one thing that banks and the CEO has to get their head around is like permissionless blockchains versus permissioned. And so if you go back 4 years, 3 years, everyone was about permissioned blockchain, very insular and very controlled. But obviously that doesn't have any of the sort of net benefits of an open source. So I think there's a lot more products and banks have a lot more ability to control a permissionless network and therefore deploy their tokens or the securities via a sort of tokenized product easily.
Yeah. I think regulation also plays a big role in adapting your bank strategy or neobank strategy to this. We'll get to that, but I want to ask a question to the audience. I think Turkey is one of the leading crypto trading countries. We have seen the data on that. Stable coins are widely used for on-off ramps, and also we do actually like trading in this country when you look at stock turnover rate and also volumes. But maybe let's ask the audience and see if this is right. So who owns digital assets in the room? Like kripto varlık sahibi olanlar ellerini kaldırabilir mi? So I would say about, wow, that's 35% of the room, if my math is correct.
Lots of opportunity.
Yes. And I think the second question to that is, I think when you look at how Turkey adopted or started trading cryptocurrencies was through an exchange platform, an exchange interface where there's an order book and you buy and sell, etc. But that is going to change because now you have banks offering this trading capability. They also want to offer custody. So if you are a bank or a neobank or a fintech or a brokerage entering into digital assets, what are some do's and don'ts in your opinion, especially on trading side? Like,
the mistakes I have seen very often is that banks tend to build a gold-plated solution and work on that, and then time evolves, and then they see additional features they want to attach to that, regulation change, so they have to keep up with that. So at the end, they don't come up with a product at all. Yeah. So what I would suggest is to start with a very simple single-trick pony, which enables clients to buy Bitcoin and ETH. They don't even need send receive in the beginning. They don't need staking. They don't need lending, borrowing, or any of that. It's just basically to get this started. And I think there are a lot of pieces you could bring in from the market, which is really enterprise grade. You can build on top of that, and over time integrate that into your own tech stack. So you don't have to have everything in-house in the beginning. There are firms like a Coinbase and us who help you in that journey. And I think time to market is of essence here because the market is moving quickly. And the educational journey you have on that way and bringing something out really pays off into the whole organization, into it.
So don't list 300 tokens on day one.
No.
Yeah.
I wouldn't.
No, I think just to add to that, I think making sure you resource the project correctly and get input from around the firm. We often see some banks coming at us from lots of different angles in an uncoordinated way. So I think there's efficiencies to be had there. And when you're doing due diligence on the institution providing the service, probably to do that is quite a bit of work. So you probably want a provider or a couple of providers that can do most of the things that you need, so that you don't have to onboard and go through that process. I think that can help you enable and start and begin your journey, but with a view that you can add other providers on a later date for sure. And so those are the things I'd say. Just we see some banks doing really well and fintechs doing really well, and others
not executing as well.
Learning.
Yeah. But I think learning is a very important part, and I think in Turkey you see a lot of financial institutions engaging in a learning curve process early on, sometimes with advisors, sometimes with vendors during an RFP process. And I think building that generational gap, knowledge gap, because I always talk about, boomers in the room versus, the DeFi degens in the room. There needs to be a right balance for it, because when you talk about a stablecoin enabled card, then you're talking 27 different things in one person's mind. Yeah. In another person's mind, they just see two things. I need the card issuance and I need the stablecoin provider. So I think this educational gap within these large organizations is a thing, but what do you think vendors such as yourselves, partners such as yourselves can do to help banks? Is it events? Is it presentations? Is it product demos, pilots? What has worked for them in the past when you engage them?
We sort of are extremely transparent, and so we say what do you need, and we sort of work with them in terms of the different teams, whether it be compliance, risk, legal, operations. We'll do on-site due diligence days. Sometimes they can be up to 3-4 days for those teams to come in and do full DD, or we'll go to them and again bring the experts that we need to sort of make sure everyone is comfortable. But we can do that on an ongoing basis. We obviously, if their product grows, then we grow with them. Yeah. So anything we can do to help market, promote. But we also have a deep bench of resource when it comes to research and expertise on certain topics. So we can also help in terms of whether they are doing marketing or need to produce material or just educate their sales team. You know, that can also be a very important
Do
point.
your own research and follow you on LinkedIn.
Yeah, something like that. Something like that. That's a good suggestion. That's definitely a good suggestion.
Jan, your take on it?
Yeah, pretty much the same approach, very hands-on. It's usually you set up different streams and legal compliance and product being basically the mainstreams there, and then having on-site workshop with our clients, going through that, having weeklies to go through this process. And on that way, education takes place, and that goes in both directions because every client is different. Yeah. Every setup differs in a way. It's not really off the shelf, and these processes work pretty well and straightforward. And it's possible then to set something up in a reasonable time frame and to be in time and budget at the end. Yeah. Yeah.
I think the good thing is it's not new. So we've done it many times before. Yeah. We have over 240 bank and broker-dealer clients on board. So this is a tried and tested path. Yeah. You know, each one is a little bit different, but we can sort of articulate best practices and just how we think things might work and work from there.
Yeah. So let's put back in that regulatory topic into the conversation, because when you say banks and fintechs are similar in their approach to these things, the only differentiating factor is usually jurisdiction. So the bank in Dubai or the bank in Turkey or the bank in Germany might want to offer the same end product to the user, buy and sell, send and receive, etc. But regulations when it comes to custody or certain KYC requirements, they differentiate. So when you look at Turkish regulations, which are, let's say, formidable and becoming more refined and more clear, how do they stack up against, you know, Dubai or MiCA or the Genius Act in the US? How would you assess Turkey as a market? Is it regulatory friendly or is it prohibitive? What are your thoughts on that? It's a difficult question, I know.
Well,
so
maybe I think the starting point Turkey has is tremendous. You have, I think, Channel says 20 million users in crypto, which is a lot, and you have a banking infrastructure which is really tier one, which is very digitalized, which is first class, and to build on top of that, now with regulation coming into place, I think that is a tremendous starting point, and I think a lot of other countries envy Turkey for being in that position.
Certainly the UK.
Yeah. So, yeah, I think obviously no regulation is ideal because you have different points of views into that, what would be ideal. But the good thing is to have a regulation in place, a framework in place, which then gives basically the rules and you can then follow and be compliant. And that is what institution needs to go into their asset class. And to have that with that law coming in place last year and now the application process starting here and with the licenses coming out, I think that will really be a trigger point for the market. Yeah.
So you don't need to necessarily lean on a licensing framework because you're independent in terms of an infrastructure provider position. You don't need that. Yeah.
From our end, and obviously if we provide access to institutional liquidity, we have to be regulated as an investment firm on ourselves as well. But we don't need to basically be regulated in each of these institutions if we do that on a B2B basis.
Okay. Yeah. James,
what do you think? Just say that, I think having regulation allows people with some guardrails to operate, right? And so hopefully then the regulators take feedback and they work from that, and then you end up in a better space. I think we've seen that with MiCA actually being one of the first regions really to sort of set the standard, probably with Switzerland before them, and then others coming to the market now. So I feel that the regulator will also have one eye on other jurisdictions, and that will help because there'll be some comparative notes to be had, and
Almost like a competition.
yeah. They don't want to, and so there's certainly countries who are lagging for sure.
Yeah.
And so I think having it in place is a good thing, and no regulation's perfect, as Jan mentioned.
Yeah. Okay.
But that sort of also provides opportunity, I think, for growth.
But from what I see, it's quite meaningful, what I've heard, and the regulator is open to have these type of conversation, and is thankful for getting that input. That is not everywhere the place. And yes, of course, there are things you would like to have in the different ways, like here might be stable coins for payments as well.
Yeah.
These kind of things, but I believe this will evolve over time, and the regulator will adapt to it. And yeah.
So it's hopefully a growth driver. So we have only a few minutes left. Let's talk about the future. We'll do a quick fire in a minute, but sitting here today, given the market constraints and objectives, what do you think the key opportunities for banks, fintechs, neobanks, financial institutions around digital assets? Obviously, we talked about stable coins, trading, other things, but fast forward the next 12 to 18 months, and we are in Turkey, so let's maybe localize the conversation around that. So what are some of the opportunities for the Turkish financial institution system?
Well, I think as much as we've been sort of operating historically and independently as a sort of our own sort of crypto firm, and clients coming to us, we've always known that there's probably a preference for them to go through their banking relationship because of all the other services that they provide that are non-crypto. And so we don't see it as a sort of competitive force to our business. We see it as actually like an enabler that should bring in more clients, more users, more trading, more custody of assets, more other products in terms of payments and settlements and all the things we've talked about today. So we see banks and fintechs as an enabler, and Turkey being no different to any other region in terms of that. So hugely exciting with regulation in place, and what the future could hold could be very significant.
Okay. Very positive. Very
We
nice.
talked a lot here about brokerage, but I think the big picture is much bigger than that. It's really about building the next infrastructure layer for financial institutions and for capital markets. And I think Turkey is primed in building that with the regulation now in place and with having a first-class banking system to understand digital asset really as that foundational layer for banking services to their clients. And that goes far beyond buying Bitcoin and ETH, obviously. And there's a huge benefit to get new products out to the client and to become that in a very efficient manner as well.
Okay. So earlier today, there has been a lot of discussions about AI and how AI and crypto and stablecoins are converging. So maybe last question is on this one, then we'll do the quick fire. But what do you think? Is AI good for our industry or not so good? Or will it deliver some results in the future? What do you think?
I think it's a huge enabler for crypto because I mean, Coinbase with the X402 standard, which basically enables payment rails through HTML messaging, and with a web which will change from a web browser approach to an agentic web with agents basically enabling them to transact value, and that could be money, stable coins, but it could also be identity and other things. I think that's a huge enabler for crypto and for DLT, and I think also a very good vantage point for banks to use that in their product and offering.
Excellent. All right. A quick fire. Again, no investment advice. What will be the Bitcoin price in 1 year? Next year in this conference, what will be the price? Personal view. Higher or lower, maybe? I don't know.
I'm always optimistic with, and just with all the liquidity coming into the market. So I think this time next year, I think we'll be. Oh, it's a difficult one. I think by halfway through next year, we'll be up to 150.
Okay.
But I don't know if it tails off a little bit.
All right.
So maybe
James is going long. How about you, Jan?
I mean, eat your own dog food, so I say 200. But
200. All right.
But it's a risky asset, and if you have to sell in 1 year, I wouldn't bet on that.
What's your view?
Yeah.
You know me, I love perps and meme tokens and stuff. So, but I think on Bitcoin, I think we're going to have a little bit of a bearish run in the next 6 months. Summer times are always difficult. It's dry. And then I think come November next year, we'll see somewhere in 150, 200 bands. So I'll pick something in the middle. Yeah, how about that?
Yeah.
All right, amazing. Well, thank you so much for your time and being with us.
Thank you for having us.
Thanks again to ForInvest team and Sarah. They have been great hosts, and hopefully this conversation was useful.
Thanks a lot for the opportunity.
Yeah,
Thanks,
thank
great.
you everyone. Appreciate it. Thanks.
Thank you.